please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the top story today, in a big shake-up at ICICI Bank, MD and CEO Chanda Kochhar has decided to go on leave, an indefinite leave till an inquiry led by Justice B.N. Sri Krishna into allegations made against her by the whistleblower. Allegations of conflict of interest is complete. The bank has now appointed Sandeep Bakhshi. Currently, he was the head of the life insurance arm of the ICICI Group as the COO. Ritu Singh joins us with more details on that. The stock, in the meanwhile, is now down close to about 1.5%. It rallied nearly 4% in yesterday's trade. So I guess all the news was in the price, and today it's coming in for some amount of profit booking. But Ritu, it's over to you now.
The suspense is finally over, and it looks like the board has decided to give the benefit of doubt to Chanda Kochhar by allowing her to stay on as the managing director and CEO of ICICI Bank. But, the board also said that Chanda Kochhar, in line with the highest standards of corporate governance, on her own has decided to go on an indefinite leave, pending, of course, the results of that independent probe committee that will be headed by Justice Sri Krishna. Also, the board, as expected, has appointed Sandeep Bakhshi, who is currently the ICICI Pru Life MD and CEO, as a whole-time director and chief operating officer of the bank to oversee all of the operations. So all the executive management and other executive directors will be reporting in to Mr. Sandeep Bakhshi, who in turn, according to the statement of the bank, will be reporting to the MD and CEO, and in her absence be reporting to the board of ICICI Bank. Do remember, Sandeep Bakhshi is no stranger to banking. He started his career at ICICI Limited in 1983, has overseen both the wholesale and the retail businesses of the bank before heading on, to ICICI Life and his other functions in the group. Separately, the board has recommended to the board of ICICI Pru Life to consider the appointment of N.S. Kannan as the MD and CEO of Pru Life in the absence of Mr. Sandeep Bakhshi, who will be with the bank for the next 5 years at least. Also, separately, we were expecting some announcement on that independent probe committee as well, but nothing was released by the bank on that front. But we have picked up from sources that the official letter of appointment from ICICI Bank has gone to Mr. Sri Krishna only on Friday, and therefore the probe is yet to begin. He will begin the process of appointing members of this independent committee that will be looking into allegations against the Videocon group, and it'll comprise of several experts, lawyers, as well as forensic auditors.
Okay, thanks so much for that, Ritu. By the way, keep an eye out on the screen. I think some commentary is coming in from Piyush Goyal. He's talking about India requiring more than 1 lakh wagons. Now, that could be the case why, in fact, we have stocks like Texrail as well as Titagar wagons. Manglam just told us that, in fact, both those two stocks, they are moving higher as we speak. Maybe that could be one of the reasons on the back of this commentary that's coming in there. But getting back to the ICICI Bank story then, as Sandeep Bakhshi moves to ICICI Bank, the board has appointed Mr. Kannan as the MD and CEO of ICICI Prudential. Yash Jain joins us with more details on that front. Yash, over to you.
Well, Nigel, as you rightly pointed out, the management reshuffle at ICICI Bank also got a change of guard at its life insurance subsidiary, which is ICICI Prudential Life Insurance. As per the direction from the board of the bank, ICICI Pru Life approved the appointment of N.S. Kannan as its managing director and CEO, relieving Sandeep Bakhshi from that very role, who will continue to serve as the non-executive director of ICICI Pru. Of course, this reshuffle at the life insurance subsidiary will also require the insurance regulator IRDA's approval, but that will be more of a procedural requirement. But at the moment, talking about the man at the helm, Narayanan Srinivasa Kannan, academically, he's a CFA from the Institute of Chartered Financial Analysts. He also holds a bachelor's degree in mechanical engineering, also an MBA from IIM Bangalore. And as far as his association with the ICICI Group goes, he was appointed as a project manager in the year 1991 with the ICICI Group, went on to become the executive director of ICICI Bank in the year 2009. Various departments he's looked after, like finance, corporate, legal, compliance. Also, he was appointed as the chairman of the ICICI Bank UK PLC in the year 2017. He's also played a key role when it comes to the subsidiaries of the group. He's been the chairman of ICICI Securities Primary Dealership, ICICI Pru AMC, ICICI Eurasia, as well as the two life and general insurance subsidiaries, which are ICICI Pru Life as well as ICICI Lombard. So a clean blend of experience as well as understanding of all the subsidiaries is what has made the management choose his name for the position of Managing Director and CEO at ICICI Prudential Life Insurance.
Okay, Yash, thank you very much for that. But let's find out how brokerages are reading this particular development. Abhishek joins us for that. Abhishek?
Well, you know, Rima, to begin with, brokerages have a mixed view. While Morgan Stanley says that they have an overweight rating on ICICI Bank with a target price of 425, but they say that they need to wait and see whether Ms. Kochhar is reappointed as the CEO or not. The board also likely to see some changes with respect to their non-executive chairman who is set to retire in June 2018. Mr. Bakhshi will be likely the front runner, you know, to lead the bank as its CEO after Chanda Kochhar's term. Expect asset quality and underlying earnings to improve from FY19 is Morgan Stanley. ICICI Bank and ICICI Pru have a target price of 380 and 520 from Jefferies. Jefferies says that the rotation of roles between ICICI Bank and ICICI Pru is good, but they wonder what circumstances have actually led to the three-tier structure at the bank collapsing to a two-tier structure. IDFC Securities, on the other hand, has a outperforming rating with a target price of 370. They say that Bakhshi has vast experience across corporate and retail businesses of ICICI Group. It is a win-win situation for both the groups, that is ICICI Bank and ICICI Pru, and ICICI's board has ensured smooth business continuity and address the concerns on succession planning. Back to you.
Okay, all right, Abhishek, thanks so much for that. Well, we'll get our eye back onto the Indian markets, but I'll just tell my director to pull up the intraday chart of some of these Shanghai as well as the Hang Seng. Let's pull up the Indian markets first. You'll see that we're sitting, yes, with a cut of around approximately 70 points approximately, but I think we must get the other couple of markets up, because now the Hang Seng is down nearly around 920 points as we speak. So the Hang Seng as well as the Shanghai market. The Shanghai market, by the way, that's down nearly around 145 points approximately. So I think we should get that market as well up for you on screen. Big selling towards the end of that trading session out there. So just keep an eye out on both these two markets. Big cut is what we're seeing. Well, I think we'll slip into a short break. Up next, we'll get chatting with Mr. Karthik of ICRA on the out. The Finance Minister Piyush Goyal is meeting heads of public sector banks to resolve various issues concerning them. Timsi Jaipuria joins us on the phone line to tell us what's on the agenda. Timsi.
Bank being represented at the SBI headquarters in Delhi, and they are going to meet Finance Minister and DFS Secretary Rajiv Kumar. As I speak to, the meeting has just started a minute back, where Finance Secretary has already entered, and there is going to be a detailed.
Okay, Timsi, we seem to have, facing some audio issues with you, but there will be about 15 public sector banks from the east and northern regions which will be participating to resolve the various issues concerning the bank. So that's something that we will be tracking very closely. But let's, in the meanwhile, as we reconnect to her, let's turn our attention to the NBFC sector. That's in focus after an ICRA report said that they could face heightened pricing pressure from the second half of this financial year if the rates remain high in the system. EM Karthik of ICRA joins us to throw more light on the report. Karthik, hi, afternoon. Reserve Bank of India just raised the interest rates. They sounded a bit hawkish. Given an environment of rising interest rates, what could be the impact on the NBFCs, and what would be the extent of pricing pressure they could face?
Yeah, I mean, the impact could be to the extent of about 45 bips to start with.
45 bips will be the impact on their profit margins, on their net interest margin?
This would be the 45 basis would be the impact on the cost of funds.
Oh, cost of funds, okay.
Cost of funds. The net impact could vary from entity to entity depending upon their ability to pass on the cost increase to their ultimate borrowers. That might happen over a period, but if we were to assume that the yields remain at the current levels, then the net profits could be down by about 35 to 40 bips.
35 to 40 bips. All right. Karthik, if the cost of funds are going up by nearly around 45 bips, do you think it'll make a big difference to them? Because as it is, they are targeting a different, a different set of customers altogether. Your take on that?
Absolutely. Yes, I mean, the NBFCs have a better flexibility to pass on costs to their borrowers because the segment is different. Of course, they do compete with banks in some key segments where they might have to face incremental pricing pressure. While the other segments, would have a relatively lower level of pressures going forward. But overall, the impact could be higher because even banks are looking at retail segment as a focus area for their growth, especially the private sector banks.
Okay. So with a rising cost environment, do you expect some funding issues for NBFCs? And if you could elaborate a little more on that?
Yeah, I mean, the key funding sources for NBFCs are banks, mutual funds, and insurance companies. Typically, these are, it is banks and mutual funds who are the major, bedrock for the funding part for NBFCs. The issues that possibly some of the lower-rated NBFCs or the smaller mid-sized NBFCs could face is the fact that each bank has an internal limit or a sectoral cap to the extent of what they can extend as a credit to NBFCs. So it varies from bank to bank depending upon their own estimation of the risk perception for the specific sector. So in the last year and a half or so, the credit growth in the NBFC sector has been good. Banks have been participating well directly in the form of taking exposures as debt, or also have been investing in the NCDs or CPs that these NBFCs have issued because of the lower rates that they were able to command in the past. So the exposure that the banks have taken on the NBFC sector has increased quite sharply over the last 1.5 years. So we expect some banks to have already reached their internal cap on the NBFC sector as a whole. So incremental credit flow or the exposure that they could take via other means could take a backseat, at least for the lower-rated entities to start with. So the impact could pass on or move up to the higher-rated entities as the things continue like this.
All right, Karthik, just a final question. In the past, we have seen, even when the borrowing cost was higher by maybe around 200 basis points as well from what it is currently, NBFCs, they did good business at that time as well. So if you could give us a sense, what is the current rate they're growing at, and how do you see it going ahead as well?
Last year has been a fairly good year for the NBFC retail segment as a whole. They grew by about 23%. We are looking at a managed portfolio of about 7.5 trillion, about 7.5 lakh crores. So that's one of the fastest growth that they have seen in the last 4 or 5 year period. So that wise, growth drivers are remaining intact. We do expect them to grow at about 20% this year because of possibly some level of the base effect of last year. But the funding would be a key concern because people over the period have been acquainted to a lower rate. So incremental business based on possibly some amount of pass on which NBFCs would do going forward would be a monitorable from a growth perspective. So 20 is the base that you could start with for the current year, but it could adjust either ways by a percentage or so, depending upon the credit demand and how. There could be some level of postponement also from a demand perspective if the rates are higher.
Okay. All right, Karthik, we'll leave it at that. Thanks so much for joining in. Just a quick check once again on the Asian markets, where the relentless pressure on the slide continues. Hang Seng, as my colleague has been pointing out, is now down close to about 900 points. Nikkei has a 400-point drop. So across the board, the cuts are quite deep, and the sharpest cut has come through in the Chinese markets, coming to a close of day's trade there, and that's down by close to about 5%. So in comparison, while the Indian markets are in the red, the cuts are less. So the Nifty is just down close to about 0.6%. The mid-caps are underperforming, but relative to the rest of the region, our cuts appear to be on the lower side. We'll await what the European market will throw up. This is a global issue that we're facing on the back of a possibility of an escalation in a trade war between the world's largest two economies, US as well as China. Get into a break, then we'll come back and address the market technicals. Mitesh Thakkar and Kiran Jadhav. Welcome back. Sun TV is the stock which is on our radar. ICICI Securities has downgraded the stock to a hold from a buy rating, got the target price down to 895, and the key reason is their core market of Tamil Nadu, where the company has a dominant share, is seeing incessant competition from Star as well as the Z network. So Star's market share has risen to 23%, while for Z it stands at 21% in Tamil Nadu, and for Sun TV the market share has fallen from a peak of 71% to now about 47%. In fact, in Tamil Nadu, if you plot the performance, while it continues to maintain a leadership position, its market share has been steadily declining. So in Q1 of FY17, its market share was close to about 67%. It's come down now to 47%, while for Star, which operates under Vijay TV, the market share has gone up from 14% to 23% in a span of 2 years. And for for the Z group, it's gone up from 9.7% to 20%. In Telugu and Kannada, the company's market share improved in FY17 as well as FY18. But now ICICI Securities says that over there as well, their performance has started deteriorating, and the company's plans to enter the non-South markets of Bangla and Marathi is a welcome initiative. For now, it's the market share erosion in their key markets, which is a big concern. So they have lowered their ad revenue growth as well as the margin estimate for Sun TV, citing the impact of the new channel launches.
Okay, all right, Rima, thanks so much for that. Well, keep an eye out on the markets, the broader markets as well. There are select stocks that are moving around. You have Kaveri Seeds that's moved to the low point of the day, and Oil India as well is low as we speak. The Dow Jones Futures, now that's indicating a cut of around 350 points just to kickstart trade. So we'll keep an eye out on that one. But how do you trade the Nifty from here? Mitesh Thakkar and Kiran Jadhav, both of them are with us. Good day, gentlemen. Thanks so much for joining in. Mitesh, coming across to you. What's the trade on the Nifty? How low can we go? Asian markets, they're down between 3 to around 4% as we speak.
Yeah, afternoon, Nigel. I think I am not looking at a big decline, but when we broke below this 10,775 level, I think a test of 10,700 to about 680 could happen. There was a gap up on the 6th and 7th of June, between the 6th and 7th of June, around the 10,700 mark, and a couple of important moving averages are at 10,680. So I think another 30-40 points could happen, and if we don't break below that, then I think we'll take it, look at a long position being initiated.
Okay, so 10,650, right, is the key level that you're watching, Mitesh?
10,700 to about 680.
Okay, 680 to 700. All right, what about individual trades? What are you recommending?
Yeah. On the stock side, I think Marico has come down to support level. So on the stock side, I think Marico has come down to support level. So good buy around this 330, 332 zones. Keep a stop below 327.5 and look for a target of 345. While M&M has broken down on the intraday hourly chart, so mild decline can happen. Keep a very tight stop at 909 and look for targets of 875.
Okay, all right, Mitesh, thanks so much for that. So important levels, 10,700, 10,680. That's the level that Mitesh is looking at. Kiran, coming across to you, the trade on the Nifty that you have, as well as a couple of picks.
Nifty is looking pretty weak, and as Mitesh rightly pointed out, there's a gap that should be tested, and even we have a target, the first target of around the 10,700, 10,685 kind of mark. But the kind of momentum that we have seen for the last 4 trading sessions, there's a lot of distribution pattern that is happening. And we believe that we could still see lower levels in the days to come. So we believe that 10,600, 625 is also possible in the next couple of days. So we have a short call on Nifty with a stop loss of 10,750 and a stop loss which is pretty near from current levels, and a target of around 10,650, 10,600 with a 2 days view.
Okay. Kiran, so would you be recommending short trades on individual stocks?
Absolutely. The cement pack is absolutely weak when you look at all the cement counters, and one that is distinctly weak today based on the derivative data is India Cement. India Cement is a short call from my side. 111 is the stop loss, and we have a target of 105 rupees 50 paise, which should be achieved today itself. Second is NIT Tech. NIT Tech, since morning, it has been pretty weak, pretty volatile as well. We have a stop loss at 1105, currently trading at 1096. We have a target of 1070, which should be achieved today.
Okay. Thank you, Mitesh, as well as Kiran, for joining in. Do we have the early rates from the European markets? Okay, let's get that up for you on your screen. The weakness in the global markets is likely to spill over into the European region as well. So on the back of escalating trade war fears, those are the early rates, and straight away 1% has been knocked off. We'll get into a break. When we return, we'll address the global space with Bruno Vestrate,